Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Lobo Tiggre from the IndependentSpeculator.com. Normally he's speaking to us from Puerto Rico. Where are you this time?
I happen to be in Minsk, Belarus, of all places.
And how's Minsk?
It's actually quite lovely in the summer. It's northern Europe, so the summers are short and the leaves are starting to turn yellow. There are a lot of trees here that have these wonderful golden yellow leaves like Canadian maples in the fall. So it's a lovely time of the year. And I'm here for family reasons, so I can't really say I'm here tracking down the next hot investment for my readers. But here we are. Fortunately, it's the age of the internet, and I can keep up with my investments and my readers wherever I am in the world.
The last time we talked a month ago, we were talking about gold looking like it was ready to poise for a large rise. Well, in that past month, it has risen. What's its future? What do you think is going to happen with gold?
Bit of a crystal ball question, but I do have two things that I think investors should keep in mind. One is that the sort of, I don't want to call it the fundamental trend, but the main driving trend right now for gold is the perception of the weakening U.S. dollar, the Fed throwing the dollar under the bus to prop up the economy, and rate cuts, weaker dollar equals higher gold. That's not changing. There's some question as to how fast, how much, and so on, but there's little question about that narrative, if you will. That's very bullish for gold, regardless of anything else happening. So that's one thing. Keep that in mind. That quasi-fundamental trend that we're in right now is strong and has not changed. On top of this, we've gotten some geopolitical volatility. We've gotten some, I don't know what to call it, tweet-induced volatility. It's really quite striking. The President of the United States tweets some major new policy initiative, like huge tariffs on $300 billion worth of additional Chinese goods, much of which is consumer goods, which would really hit Americans where it hurts. And the Chinese retaliate, things don't go well, the markets tank, and gold suddenly goes screeching upwards, faster than the other trend would have driven it, perhaps. What would have been normally a consolidation and correction period before heading higher just turned into the next leg up. But an interesting thing about that is that Trump walks back his tweet, or mostly, in part, walks back his tweet, and the markets calm a bit. But gold doesn't tank. It stops rising as fast, but it doesn't tank. That's really significant. Why is that? If you have a tweet in one direction and then tweet in the other direction that undoes the first tweet, why doesn't gold go back to where it was? Well, because both tweets upset the market. And, tweet in one direction, tweet in the other direction the next day, that's not a calm situation in which investors can make projections and decisions. And even if the tweets had completely canceled each other out, like matter and antimatter, you'd still have the volatility. You'd still have the explosion when the matter and the antimatter touch. And in that environment, gold does well. So what I'm saying is that we've seen a rise based on what I'm calling these quasi-fundamentals. That's longer term, and that's solid. And on top of that, we're seeing increased volatility, which could boost gold at any time. So for anybody who thinks, oh, I missed it, oh, it's too late, gold's already broken out, I would urge you to reconsider. I don't think you've missed it at all. I think I know that gold is nearer to its 10-year lows than its 10-year highs, for example. It's just broken out of a rut. So I see it as being something with a lot more upside than downside ahead. And I strongly encourage people to participate. That's what I'm doing with my own money.
Now, when you look at gold, do you look at gold bullion, gold miners, gold ETFs, gold junior miners? Any particular area you favor?
Well, that's a good question in more ways than one, because there are two, at least, very different aspects or ways of looking at that. And one, of course, is to look at the metal itself, bullion, coins, or even jewelry, if you like. The reason for owning gold is not as a speculation. I am the independent speculator, and I learned from Doug Casey, the international speculator, and he taught me, and I understood and really took to heart that the reason for owning gold is because it's gold. It's the long for which there's no short. You can hold it in your hand. It's physical value in a highly liquid form that can be used in case of dire need. And that's a whole other story, but I've actually experienced that in my life. But anyway, the point is that we own gold for prudence. We own gold because, come heck or high water, that gold will have value and it will be a liquid asset that can be put to use. Personally, gold bullion, physical gold in whatever form you like best. But for me, it's gold coins. That's where I put my savings. That's how I accumulate physical wealth. Now, in terms of making wealth to accumulate, that's where the stocks come in. Personally, I'm at a stage in my life, I'm still young enough and still in the growth phase here, where I am looking for bigger gains. I'm not trying to protect my wealth and gain a little bit on the side. I'm looking to make serious wealth. So I do tend towards the junior end of the spectrum, and I like the stocks that I see have extraordinary potential for large gains, which we all know is what the resource sector is known for, these junior mining stocks. That said, I understand that one size doesn't fit all. If I was on a fixed income but believed that higher metals prices and precious metals prices anyways were likely to provide good returns on some of the stocks, I could see going for some of the larger, more stable companies, maybe some of the dividend payers to boot. And that would make perfect sense to me. I'm not at all opposed to that. All I'm saying, I guess, is that the answer depends on the purpose. And the purpose for the metals themselves is very different from the stock.
Is one of the good things and maybe risky things about gold juniors is that being small companies, you can phone up and talk to the CEO or president or drop by and look at either their offices or even their operations.
That is true. As a newsletter writer, I do get a little extra attention. It's easier for me to get my foot in the door and go look at a project or something. But even I can't just call up Newmont Gold Corp and say, "Hey, I'm dropping into your mine today. let me in, show me around," right? So that does help. And due diligence is important. So to the degree that one can do better due diligence on smaller companies, then that's added upside to that case.
We'll have more with Lobo Tiggre right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, silver still seems to be lagging way behind gold. They used to be tag team buddies, but lately it looks like silver's been riding in the back of the bus and missing out on all the action up front. Do you expect silver to pick up?
I do, and I think this is actually a very good thing, especially for listeners who might have missed gold's breakout, is that the silver breakout still hasn't happened. Now, it started. In the last couple of weeks, we have seen silver closing the gap with gold a bit. So the gold-silver ratio that has been historically way out of whack, over 90-1 against, when the ratio over recent years has been more like 60-1, and the long time, like millennia-long ratio has been more like 16 to 19-1, closer to the naturally occurring ratio. So we've had these enormous distortions in the gold-silver ratio, and some people have thought, well, that's because silver's become an industrial metal. Well, yes, but it's always had industrial uses, and it hasn't stopped it from also being a precious metal and used as money in many countries in the world. In fact, the word for money in many languages is silver, not gold. So silver, like gold, is a monetary metal. They do move together. As you say, buddies. They've always been buddies. It's just how close a buddy they've been. And recently they've been less close. And what I'm saying is even more recently, like the last couple of weeks, they've started getting closer again. That's extremely bullish. It gives silver more upside than gold. I think both go up together, but you have a lower starting point for silver. So just on that basis, silver makes for a better basis of speculation if you can find a good silver company, which is a whole other question. The other thing, though, is that silver sometimes goes screeching north way faster than gold and peaks first. It's much more volatile, so it all fits the pattern. I'm not promising your listeners that silver is about to do that. What I am saying, though, is that if we're in one of those circumstances where silver takes off ahead of gold, you don't want to miss it. And why might I think that? Well, there's not enough data on this. There aren't enough of these things, at least since gold and silver started trading more freely, or gold after Nixon closed the gold window in 1971. There are only a couple instances of this, and 2 or 3 isn't much data to go on. But my impression from looking at these times is it's times when precious metals are rising and there's a perceived squeeze on the silver supply, whether that be the Hunt brothers trying to corner the market in 1980 or the post-2008 crash putting production of copper mines and other industrial metal mines on the back burner and thereby restricting the supply of silver at a time when gold and silver are rising. These kinds of combinations, higher precious metal prices at a time where silver supply might not be able to keep up. That's my thesis for what can send silver flying. Now, what are we looking at now? We're looking at a slowing global economy. We're looking at possible trouble in the U.S., even though the Fed says everything's fine. And we're looking at supply destruction in the industrial metal space at a time when precious metals are rising. So again, I can't promise this. I don't have enough data to say this is a strong finding, and I feel very responsible about saying these sorts of things, or the need to be responsible. What I am saying, though, is the conditions seem to match, and if I'm right, it should be spectacular for Silver Place, and I definitely don't want to miss that. And in fact, in next Monday's edition of the Independent Speculator, I'll be writing up a new silver play that I'm planning to invest in.
We'll have more with Lobo Tiggre right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, are we going to see more or bigger price hikes for cobalt now that they're going to be closing that giant cobalt copper mine in Congo?
It's hard to say, Jim. On the one hand, that's a big variable. On the other hand, there are less transparent sources on the market. Like, one of the things I was noticing in recent coverage of the collapse of cobalt prices over the last year is that it seems that users in China amassed giant inventories of this that were kept off the book. There was no internationally published figure of cobalt stocks held in China or really elsewhere. It's not one of those metals. So you looked at the supply and demand, you'd come to a certain conclusion about the price of cobalt, and then it was wrong because there was what turned out to be secondary supply coming to swamp the market. And we've seen cobalt in the face of actually existing mine supply deficits. We've seen drastically lower prices because there was more cobalt coming from elsewhere. Now, is that done? I don't know. Nobody knows what's going on with those stocks in other places. So it's possible that it's not done. And on top of that, we have to say this is an industrial metal. So, there's big news right now with the German economy slowing faster than expected. The Chinese economy just ticketed in at a surprisingly low GDP growth rate for China. Shocking, below 5%. And so these kinds of things would definitely put a damper on demand for industrial metals, even scarcer ones and important ones like cobalt. So I'm extremely bullish longer term on both cobalt and copper and nickel, which you didn't bring up. Those are some of my 3 favorite industrial metals. But it's really hard for me to start buying in advance of what looks like bad news for industrial metals. So my personal action here, and what I would commend to your listeners to think about, is to look at the global economy, look for the industrial metals that see severe supply destruction and are therefore going to be in short supply and going to see higher prices in the future. But wait to see the global economy bottoming or looking like it's bottoming before you buy in. Because if things get much worse, and they could get much, much worse, it doesn't matter how rare a metal that's used in industry is, its price will go down. You can have insufficient supply of copper, and copper prices go way below the cost of production and stay there for years. We've seen it before. It could easily happen again.
Uranium, what kind of action is happening there?
Well, it's kind of in action at the moment. There was all that big kerfuffle over the Section 232 petition to Donald Trump to help U.S. uranium producers. And the markets have reacted as though Trump shot that down in flames. But in fact, he didn't. He opted to study it for 3 more months, and we're now waiting for that 3-month period to be up. And that's causing a great deal of angst. I think, actually, that uranium is a spectacular opportunity on this basis. I think the market's reaction, as though Trump has somehow killed the uranium rally, is just completely wrong. In the first place, the price of uranium hasn't retreated, or rather, it had retreated before this. It hasn't retreated more. It's going sideways. Its overall trend since January of 2018 is upwards. That trend remains intact, and it's an upwards trend. So the value of these uranium companies, whatever it may be, and yes, they're in trouble. None of them can make money at these prices, but we knew that already. Whatever the value of these companies is, let me correct that. There are some that have business models that allow them to make money even at current prices, especially the ones with longer-term contracts or the ability to process alternate feeds. But generally speaking, the uranium companies are in a world of hurt even at current prices. So that is what it is. In that context, we have been seeing rising uranium prices. That hasn't changed. And the whole 232 thing was potentially a tailwind. Its absence doesn't change any of what I just said. So for the stocks to drop to, multi-year lows in some cases, drastically on sale for something that was only a potential tailwind, and the disappointment on that front, I think is way overdone. And so the low entry points, I think, create excellent opportunities in the uranium space. That having been said, one of the things that's hurting the uranium stocks right now is that they seem to be moving again with the general market. So when Wall Street sells off, a lot of the uranium stocks sell off. Now, that makes no sense. Uranium hasn't sold off. It's just the market sentiment. And that makes it an opportunity in the same way as what I was just saying before is an opportunity. And I'm not hedging on that. I stand by that. What I'm saying, though, is that it may continue. And in fact, if we see a big meltdown on Wall Street, which is looking more and more likely to be in the near term in the cards, and I don't know that we necessarily have to see a 2008 style crash, but just a major correction in the 10 to 20% range on Wall Street. If that happens at a time where uranium is still not exciting investors, those uranium stocks will absolutely get hammered. And so I don't want to tell anybody, oh yeah, the uranium stocks are a great deal now, no fear, go ahead and buy, they're on sale for the wrong reason, because they could go much more deeply on sale in the near term. That said, I don't know that will happen. It may not happen, and they are, in fact, I think, oversold. So I haven't sold anything. My attitude is I have great confidence in where this market is going. I think all of my positions will end well. But I'm watching to see if we get a broader market meltdown and I can buy more on the even cheaper.
The unrest in Hong Kong, is that affecting world financial markets, or is this more of a political play?
But clearly it has, and we've seen the broader indices react strongly to the news out of Hong Kong, and that's not, in a way, it seems a little surprising, like isn't this just politics in China? You know, who cares what happens internally to China to the rest of the world? But Hong Kong is a very important part of the Chinese economy. It, having, gone back to China after the British turned the keys over 20 years ago, it is part of China, and its GDP is part of the Chinese GDP. And so what happens there is important. If that is seriously disrupted, what's already happening is a serious disruption. This will have an impact on Chinese consumption and demand for materials and everything. If that gets worse, it will have a protracted impact. So yes, it does matter. This is a significant factor in one of the world's two largest economies. No surprise there. Of course, what you really want to know is, or what your listeners probably really want to know is, how does it end? When does it end? What do we do? What's the play here? How do we make money on this? And I'd love to say, here's my very clever idea for how you profit from all this. Take it, and you'll make tons of money. Unfortunately, I can't do that, and I would be very suspicious if anybody who said they had the perfect Hong Kong play guaranteed to make you money. What I will say is, rather like the tweets before, whatever happens is this is yet another factor of increasing volatility in global markets, and that's good for gold. That's as specific as I want to get.
Lobo, thank you so much for chatting with us.
A pleasure as always, Jim. Thank you.
Reporting live from Minsk, Lobo Tiggre from the IndependentSpeculator.com. If you have any questions for Lobo or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.